Hey guys, all content discussed in this channel is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. So, as you all may know by now, Wall Street and friends have been gobbling their housing market purchases for the past couple of years. It's become nearly impossible for first-time buyers to compete with Wall Street when they can easily offer cash payments up front. These buyers, called institutional investors, are buying nearly every listing between the price ranges that would suit most middle-income to lower-income Americans. Wall Street was the main culprit behind the 2008 financial crisis by funding subprime mortgages that led to a recession and over 8 million foreclosures. In the aftermath, while millions of Americans were left to deal with the ruins, Wall Street got bailed out by the Fed, mostly due to the thinking that some of these institutions are too big to fail. Too big to fail has now become a more contentious topic, over a decade after the recession of 2008. Concerns are beginning to mount and brew over Wall Street's unlimited funding and ever-growing appetite for single-family homes all across America. You see, prior to 2008, Wall Street wasn't that much in directly investing in single-family housing. The concept of buying a home and managing it to later resell it at a higher price wasn't in the DNA of Wall Street, since this is a lengthy process and Wall Street tends to prefer the quick and easy buy and sell buttons. But this began to change in 2008 when Wall Street began to form partnerships with private equity firms. After millions of Americans were kicked out of their houses, these private equities, funded by Wall Street, began aggressively buying thousands of foreclosed homes. Between 2011 and 2015, institutional investors bought more than 200,000 foreclosed homes. This number has been greatly accelerating in the past few years, with Wall Street growing exposure on this type of investment. The reason why not a lot of people are freaking out, at least not yet, is because even with all the housing Wall Street is buying, they still own a relatively small amount when compared to individually owned homes. The problem, however, lies in the fact that a lot of these firms are beginning to have increased influence on the number of houses listed, which is currently at an all-time low. For example, Invesco Real Estate, which is another real estate investment trust, is currently getting funding by Wall Street for an amount around $5 billion to purchase 20,000 single-family homes. Blackstone Group already owns 80,000 homes. Furthermore, they are price gouging and using legal but dirty tricks to ensure that their investments and future plans are not impeded by the needs of society. They are paying for a lot of campaigns for politicians to slow down new construction of housing in developing and growing areas. They are aggressively buying up not just housing, but hotels and motels as well as condos and apartment complexes in order to retain leverage. In simple words, today's housing market has the constraints of too little supply versus what could be assessed as unlimited capital from Wall Street to buy and price out the competition, which are families and common folk. After all, corporations are going to do what is best for shareholders and not for the ordinary middle class. As of January of this year, institutional investors owned about 450,000 homes in the United States, which was nearly the total number of listings in the United States as well. This is not good. When a large percentage of homes are controlled by a small amount of investors and corporations, the likelihood for monopolies increase, which is historically followed by increased market manipulation. Their goal right now is simple: buy as much of the supply as fast as possible so that they can turn all the housing into rentals. The risk of housing market manipulation has never been higher and people are beginning to feel the effects of this. I have been asked endlessly about what can ordinary folk do about this. How can we collectively come together to fight off big money from Wall Street? Well, today I have a story for you guys that might shed some little wrinkles at home. People are beginning to band together in rebellious nature to give the middle finger to Wall Street. In the Potter's Glen neighborhood of Charlotte, North Carolina, Wall Street began bombarding house owners with bids for their houses well above the normal valuations. As you might imagine, many took the deal and Wall Street quickly converted those houses into rental properties. They have become the target for large companies. The rise of investor purchases led to complaints that these companies, loaded with Wall Street money, were pricing out first-time buyers and renting to tenants who hadn't even been properly screened. Facing this sudden and overwhelming attack, one would ask, could the citizens of Charlotte fight the advances by Wall Street? And I am happy to say that surprisingly even to me, the answer is yes. You see, the Potter's Glen board has begun to leverage their power of authority to fight further expansion of Wall Street-backed company home ownership. Using the same legal authority that these corporations use to punish people who fail to cut their grass or maintain overall good presence, they have also enacted the policies that have thrown hurdles and headaches for corporations. The new rules require that any new homebuyer has to wait 2 years before renting out houses. The new rules were enacted around 2019, and records show that the pace of investor-backed purchases dropped by more than half. As you might imagine, the rental home companies have already began voicing their discontent, arguing that this is actually unfair for people because it makes housing less affordable. They reason that rental exclusion can even be discriminatory, citing the past when real estate restrictions were used to keep out racial minorities. David Howard, executive director of the National Rental Home Council, said that preventing single-family rental home companies of any size from being able to purchase homes does nothing but reduce the availability of affordably priced rental housing. Their cringe response makes no rational sense, and their inability to bring up any real reason other than sucking up what should be an American right, which is to own property, shows just how hollow and callous they really are. These companies are targeting entire blocks all at the same time. Last year, investors bought nearly 1 in 7 homes sold in the nation's top metropolitan areas. But people are waking up and taking the red pill. It isn't just Potter's Glen's board taking decisive changes now because others have been taking note. At the reserve in Back Creek last year, neighbors enacted a rule that required an owner to live in a house for a year before being able to rent it out, and now more than 18% of the houses can be approved for rental at any time. And like this, many stories are coming up, inspiring thousands of people to come together to stop the advances of Wall Street, but restricting rentals is not always just as easy as some neighborhoods have had it. These companies are trying to consult with lawyers, trying to find legal loopholes by which to make some of the new rules unlawful in trials. So far, the rules have stayed because corporations have failed to convince the court that they are being schemed out of business, and their attempts to call on history and pretend to be the victim like minorities were certainly not been well executed, most likely because they are sitting in hundreds of millions, if not billions, of dollars in cash. Investors are not giving up though, so they have now adopted some new strategies. They are calling everyone, even people not selling, and throwing offers almost weekly to see what sticks. Their bids are sometimes twofold of the current market value proposition of the houses, but not all homeowners are budging. Many interviews have shown that people are turning all of these offers down and instead deciding on only selling to people. In statements, these companies are saying they are aiming to work collaboratively with homeowners associations to find a common ground that will lead to a solution to this problem they are now facing. So far, they have had little to no success, and data shows that homeowner associations are increasingly restricting corporations from buying homes by adding rules. Funny enough, it appears Wall Street is not happy, because now we are seeing some politicians playing around with the idea of making it legally impossible for people to decline offers that are higher than the ones they prefer. That's right, if you thought Wall Street wasn't going to go that far, think again. Apparently the new thought process for the bought-out congressman that we have is to impede free will on property by enacting laws that make it impossible for you to turn down an offer when you are willfully selling in preference for an offer that is valued less. So if Wall Street offers you 5 or 10% above asking price for your home, but you want to sell the house to a new family couple that just moved to the area, you are screwed. Obviously this would be almost impossible to pass down as a law as it would violate everything fundamental. But the fact that it is even up for debate and discussion shows how much Wall Street has infiltrated the government, as well as the desperation they are beginning to feel with associations and people banding together to restrict their advances. I have no doubt that eventually they will try to take some cases to court and try to get a ruling that is a little more broad that limits the power of housing associations, so don't take these little victories as guarantees that everything is solved, but they are indeed very positive developments. Hope this gave you guys some hope, as many of you have been asking me for months what can be done. I know not everything can be resolved one way, but this is a major development that is advantageous to everyone. Let me know in the comments if you liked the video and what you think, and what has been your personal experience in anything talked about today. I always enjoy reading through the stories you guys have to share with me in the comments. Some of these videos have actually inspired me to look into certain topics based on the things you say, so don't be shy and share with us your own thoughts and experiences. I want to thank Peter Horisky and Kevin Scholl for their great journalist input and interviews which served me to make this video. And that is all I have for you guys. Thank you for making it to the end of the video if you are still here. Be sure to come on over and join the Discord for an even more engaging experience with fellow investors. We have tons of things there, from conversations about GameStop and AMC to day trading alerts, so give it a try. Links will be down in the video description. If you want to support this channel, I have a Patreon link in the description as well as some one-time donation links for Cash App and PayPal. If you join the $25 Patreon tier, you will have access to all things premium, where you can be part of a huge day trading community and get alerts to the best stocks to day trade with clear entry and exit prices. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day. Keep on buying the dip and to the moon.